public YouTube channel. I gave us a lesson on how to find high probability order blocks. If you haven't watched that video, make sure you check the link in the description of this video to go watch out that video, because it's very important. This is the episode 2 of that lesson, and in this lesson we are basically going to be looking at how to know if an order block is going to be valid or invalidated. I mean, how you are going to know if an order block is going to hold or not intraday wise. Okay, so before we move forward, let me show us a trade we took from the public Telegram channel last week. Okay, on EJ Euro JPY. Okay, let me check out that trade right there. Okay, okay, I actually gave this analysis, monthly time frame analysis of EJ from on the Telegram channel. Again, if you are not in that Telegram channel, make sure you check the link in the description and you join the Telegram channel for free trade setup. And I do take trades live on that Telegram channel. I call moves day in day out on that Telegram channel. And guys, make sure you like this video, give me a thumbs up if you are getting values, and comment and share the video so that more people can benefit from it. Okay, so that was the analysis I posted. Okay, let me see the exact trade we took, okay, on that particular pair. Okay, so this was the intraday setup. Okay, let me check the date that was actually posted. That was October 21. Okay, so that was the trade right there. This breaker coincided with the 1 hour order block right there. Okay, so how did I know that this was, notice this was on a Wednesday. Okay, this was on a Wednesday that this actually happened. Okay, I analyzed this thing. I was expecting price to actually sell off from here, seeing that price action right there. Okay, and this is the result of that trade, guys. You see more than 50 pips in some. That panned out on Thursday. Okay, more than 54 pips right there on price action. Okay, so this was right before it happened. Okay, so it's not just insight. Okay, so let's go right into price action and see what is actually happening. Okay, how we are able to catch that trade right there. Okay, so that was the 1 hour order block right there, guys, that repelled price to the downside. Okay, so look at how it was to the peak right there. It happened to the okay, guys, look at how that order block held price to the downside, and look at that push that momentum push to the downside. Look at that 1 hour order block that coincided with that 15 minutes breaker right there. And look at this trade was just, again, this is not insight. You see that I posted it on my public Telegram channel free of charge. Okay, make sure you subscribe to that Telegram channel. Look at, so you were basically risking 13 pips. Look at, this is more than 140 pips presently. Okay, over 140 pips that you just caught. And get this right, guys, personally I aim for 50 pips every week. 50 pips low hanging fruit, right? And I'm done for the week. You can build a career, you can literally build a career with just 30 pips weekly, week out, with proper risk management. Okay, in fact, I double my account. I get 50% of my account rather with that 50 pips target every week. Okay, so that's just it. We want to keep it very simple and you trade low hanging fruit. So how was I able to determine whether this 1 hour order block was going to push price to the downside from a subjective point of view? But this is not guesswork, right? So the first step to that is that you want to start by looking at your economic calendar for the week. Okay, you want to make sure that before you enter your trades, news, high impact news events are not coming. In fact, you want to be entering trades before high impact news event or after high impact news event. So that is very very compulsory. So that's the first step in catching high probability order blocks, because most of the time if you are entering trades few minutes to a release of high impact news event, you just see that price will just wick it down. You know, it will not respect that your order block. Price will just, you see it wick it down and just violate it, right? So you don't want to be entering trades when news event are just 5 minutes, 10 minutes, 20 minutes to the news event. You want to be entering trades before the news event come out, and after they come out, say 30 to 20 minutes after they come out. Okay, so that's very very important. That's the first step. Then your second step is you want to start analyzing your chart from the higher time frame, from the monthly chart. You want to see the macro view of price action. So when we look at this price range right here, okay, range of price, we can see that price is clearly posed to go higher. Okay, and why is that? You can see that price rated stops right here, broke structure to the upside. You can see this order block left a liquidity void right here. So price came back all the way to that breaker and filled 50% of that FVG, which is the consequent encroachment, okay, of the order block, the FVG, and tap right into the breaker, and price boom went up. Price came down again right here, okay, retraced back right here, there, took out this short-term low, okay, broke this bearish order block to the upside. Then that bearish order block that was broken becomes the breaker, okay, and you could see how price reacted off it to the upside. And where was price targeting? Price was targeting those equal highs there. You yourself, you can see it, okay. So that was where price was being driven to, those equal highs right there. So price was being driven to that level, and price took out those liquidity right there. That's a liquidity pool. So price took it out, then sold, left a monthly order block. So price was right at this monthly order block when I was analyzing this chart. Okay, so let's go to the weekly time frame. Okay, at the same time that price was on that monthly order block, price was right sitting on the weekly order, on a weekly bearish order block as well. Okay, so that weekly order block propelled price to the downside. Okay, and that weekly order block also did something apart from that, raided these stops right here. Okay, so price raided those stops. So when price was approaching it again, I was expecting at least some level of, you know, some selling pressure from that price action. Okay, so I was expecting some level of selling pressure at least, okay, to come back to this mitigation block and this bearish order, bullish order block, and this void that price left before the expansion to the upside. Then going to the daily time frame, you can see that price is clearly, okay, let me zoom in. You can see that price is clearly, okay, on that the week of that daily bearish order block that propelled price to the downside, breaking structure here. You could see that momentum move there. Okay, so that order block right there, price was sitting on it right there. So I was expecting price to sell last week, okay, from this standpoint of price action. Okay, so I was actually anticipating that. So it's not as if I was guessing that price was going to sell or buy. No, I didn't have two buyers. I had a clear sell bias. Okay, so that's what you want to do. You want to do a monthly, weekly, and daily top-down analysis. Okay, and that is all you need to determine the bias. When it is not clear, is it every time you get it clear that okay, price is going to buy or sell? If you don't have a clear picture whether price is going to buy or sell, you stay on the sidelines. There is no need to force it. Alright, so you must find a scenario where price is one-sided. Okay, it is that one-sidedness in the marketplace that we capitalize on, and you make a lot of money, guys. Okay, so that was what I was seeing on price. Okay, will I just, when market open on Monday, will I just sell immediately? Nah, no, I won't do that, guys. Okay, so I was patiently waiting for price to present to me what will make me to sell. Okay, and on let me see, on Tuesday, price did exactly what I wanted to see. So on Tuesday, price took out this top, okay, broke, left a breaker right there. Okay, so on Tuesday I saw a sell sector on Tuesday, right? So that's the second step. Now the third step, which is the most important, guys, tighten your seat tight right now, because this is gonna be lit. This is literally fire, right? So the second step is to check the commitment of traders data. Yes, the commitment of traders data, guys. Now I'm going to show you one of the best ways you're going to be using the commitment of traders data to validate order blocks, to know if order blocks are going to be valid or invalidated. Okay, so you basically want to be checking the two currencies. Okay, you want to be checking the two currencies in the pair you are trading. Okay, so we are going to check the commitment of traders data for euro, and we are going to check the commitment of traders data for the Japanese yen. Okay, we are going to check both the numerical values that are given, then we are going to also look at the chart for me to just explain how to use it. We do not necessarily need to look at the chart. We can just look at the numbers that are released, okay, to actually do that. Okay, so the website to check that is tradingstar.com. There is going to be the link to this website in the description of this video, so make sure you check it out. Okay, so let's check out the commitment of traders data that was released for the euro. Okay, the commitment of traders data, the COT legacy report, that's what we are actually interested in. Okay, so let's check for the euro FX. Notice these are just for intraday trades, okay, for your one short 1Q sectors. Okay, so when I check the commitment of traders data for the euro, I noticed that the commercials, the non-commercials are indecisive, okay, in the marketplace. Like, it's as if they are in between, their price action stuff, their contract they are holding. And if you look at the chart, okay, the line chart here that depicts their holdings, you can see that this is for commercials. This line is for commercials, while the red line is for non-reportables, while this somewhat blue line is for non-commercials. So we want to be very highly interested in this thing when they are either net short or net long, and you can see that it's as if they are at the zero level. Okay, so they are indecisive. Okay, so I didn't pay much attention to this euro commitment of traders data that was released. So because if you can see the non-commercials are actually trend followers in the market. Okay, they are the large speculators, while the commercials are the hedgers. Okay, they hedge into their physical product they are holding. Okay, so the non-commercials here, they have heavily net short 205,000. Okay, not really heavily net short like that. They have much long holdings and they have much short holdings, more or less, like no much different, 7,000, about 10,000 plus difference right there, not really much. Okay, so they are either heavily net short or either heavily net long. Okay, so that's why I didn't pay much attention to the euro commitment of traders data that was released. Okay, so while the commercials, they are the hedgers, right, and they do the exact opposite of what the market is doing. Okay, so they were not really heavily net short at the same time, because this is 389 long positions that they are holding, and this is 407,000 short positions they are holding. So not much of a difference. So I was not really paying attention to that. So but let's check the Japanese yen. Okay, let's check the Japanese yen. sincerely speaking, it would have been very good if I could see something reasonable on the euro commitment of traders data, because is the major pair in that currency, in that is the major currency in that pair we are looking at. Okay, so but that's no issue. We want to be checking both of them and looking at what they are doing. Okay, so let's check for the Japanese yen and see what I was able to deduce and how that was able to support my idea of a short position from a bearish 1 hour order block and a 15-minute breaker, such that I was only risking 13 pips and was looking to gain more than 200 pips. Okay, and that happened in a space of a day, guys. That's massive. Okay, so the non-commercials, they were heavily net short. This is a banger, guys. 138,000, and look at what was happening. They added 26,000 contracts to their short holdings. Boom, boom, right there. Then look at the commercials. Of course, look at their long holdings, very short. Okay, so we can say the non-commercials are heavily net short. Okay, they are what? Heavily net short. While the commercials, okay, right here, they are heavily net long. Okay, guys, can you see what I'm saying? Now I'm going to explain this. Now they have 207,000 long contract, and they added 22,175 long contract more. They have 85,000 short holdings, and they dumped 5,000 holdings. This is massive. This is powerful. This alone gives you what the bank level traders are doing on the chart. This alone, and this was released on a Tuesday, guys. So Wednesday, Thursday, Friday, you know what price is supposed to do, right? Now, what this actually mean right here is that the Japanese yen is going to be strong. Did I say that right? The Japanese yen is going to buy, at least even if it's going to the short term, the Japanese yen is going to go up. In other words, anything, if we have a pair that says Japanese yen USSD, there's no such thing, but I want us to get something. If we have a pair that says Japanese yen USSD, Japanese yen euro, okay, Japanese yen euro, Japanese yen British pound, they are going to buy, they are going to go up. So in other words, USSD, USD JPY, that's UJ, EJ, Euro JPY, GBP JPY. Okay, guys, what are you seeing from here? GBP JPY. They are going to what? They are going to sell. Did you get it, guys? Now, this is not, I'm not cherry picking, guys. I've showed you how we took that trade from, I posted it on my Telegram channel live. It's not inside. Okay, so let me show us from the chart. Okay, so this is barchart.com. Okay, so this red line is delineating commercials, and this green line is okay, guys. So we now go to the Japanese yen COT report that was released as of 2021, November 2021, 19th of November 2021. Okay, it's usually released on a Tuesday, just like I've said. Okay, so like I said, I wasn't actually paying attention to the euro commitment of traders because there was indecision, okay, that I was seeing. Okay, the non-commercials and the commercials, they are like in between. Okay, buying and selling. Okay, so not really no clear direction on the euro contract. Okay, so I now switch to the Japanese yen. Okay, looking at the Japanese yen and the holdings of the non-commercials. Like I said, the non-commercials are trend followers, while the commercials, okay, are hedgers. And the non-commercials sometimes they are like they take the high and low of the beginning of the trend. Okay, so they buy low and they sell high. Okay, while the commercials, okay, they are the hedgers. So they trade just the opposite of what the price is doing. Okay, so let's look at this together. So the non-commercials are heavily net short. That's very, very important. You need to look at their net holdings, net short or net long holdings. Okay, so they were heavily net short, and they had 26,000 net positions, while they just dumped 97 contracts, while they had 27,000 contracts, okay, to their short positions. So they were heavily net short. Okay, the person that actually developed the commitment of traders data, the use of commitment of traders data, was Larry Williams, and the way he uses that, when commercials are heavily net short or net long in the last 3 months, 2 months, okay, or in any trading period, when they have a net holding, then we should expect some sort of reversals. Did you catch that, guys? Okay, so right here, the non-commercials are heavily net short, and they added more short positions, 26,000 short positions. Okay, while the commercials right here are heavily net long, 207,000 compared to their short holdings. Okay, and they added 22,175 more contracts. Wow. So what this means is that Japanese yen is going to go up. Now you are wondering, why am I saying going up? Since the commercials, the non-commercials, they are trend followers, it should be going down. Since they are selling, look at they are selling. Why it's these ones are buying? Since they are they trade against the trend of the market, then price should be what? Should be selling, right? But that's not the case. Let's look at the chart. Okay, so let's look at the chart right here. Okay, so let's look. This is Japanese yen. This is barchart.com. Okay, so the commercials are the red line, while the non-commercials are the green line. They are also the large speculators. Okay, so right here, the commercials, they were what? Heavily net long, and this was where price was. Okay, since they are net long in their holdings, okay, so price should buy. This was where price was when that was actually happening, and the large speculators in the last look at 3 months, 1, 2, 3, this was their net long short holdings. Okay, so this is at the extreme. Okay, Larry Williams will buy this thing when the commercials are at the extreme of each of these levels. Okay, so they are the extreme, so we are at a buy area. Okay, even though they are heavily net short, okay, we should expect them to buy from here, and we expect the commercials to start selling from there. Okay, so this was where price was at that particular moment right there. Okay, so look at, this was Tuesday, this was Wednesday, this was Thursday. So from Wednesday we saw that price sold on Wednesday, but on Thursday we saw that buying pressure we were actually expecting. Okay, so that was how I was able to have some level of confidence trading this price action from there to the downside, and I was very sure to some certain extent the price was going to sell, guys. So to recap them all, how to determine whether an order block is going to hold or is not going to. You don't need to be picking order blocks randomly here and there. Just look for high probable order blocks, and I've explained why in my first video. This second video is just giving you this first video is just giving you a kind of fundamental perspective to it. The first video gives you the technicals you need to kind of pick a high probability order block, while this video is giving you a fundamental perspective, okay, to choosing an order block that has a high probability. And in this video I've discussed, number one, you need to check your fundamentals. Secondly, you need to do a top-down analysis from the monthly, weekly and daily time frame. Then you need to now check the commitment of traders data. In other words, as much as possible, you want to be taking your trades on Wednesday, Thursday and Friday. Okay, I hope you get that. That's how you do it, guys, and you get one shot, one kill setups. So if you find value, make sure you give this video a thumbs up, share the video, comment, and subscribe to the channel, guys, if you have not yet subscribed, and join my public Telegram group. The link is going to be in the description as well. Cheers.